right. Welcome, everybody. Thank you for coming, against the tornado and everything that's happening in DC. But yes, so today we're going to talk about stablecoins and payments. And a lot of people, when they think about this, they generally think or focus on the asset. But honestly, there is so much infrastructure under it that actually supported from issuers, infra, custody, compliance, distribution, wallets, you name it. Obviously, chains where they actually operate. And we have pretty much a little bit of everything in here. So let's go ahead and start off with some introductions.
Hey everyone. Hey guys, my name is Corbin Page and I lead product for Anchorage Digital's stablecoins team. So we issue the Genius compliant stablecoins for Tether, Athena, Western Union, and a couple others. Longtime crypto builder, been building in the space for about a decade now, was in traditional finance before that. So excited to talk about stablecoins.
Great. Good afternoon, everyone. I'm Yahya Fanusi, Global Head of Policy for the Alo Network Foundation. Alo is a layer 1, zero knowledge proof based blockchain that focuses on private payments. Been in the DC space for a while, think tank space, doing a lot on regulatory issues, policy issues, and national security issues based on my background. I worked in the national security space way back in the day. Happy to be here with this panel.
Awesome. Yeah, and likewise, I'm happy to be here too. I'm Harry Alford. I'm at Monad Foundation. Prior to that, I was at Coinbase and Portal, a wallet as a service company. I'm from DC, and I love the excitement around gathering with other crypto-minded people in my hometown. So thank you for having me today.
And I'm Brenda. I'm the CEO and one of the co-founders of Tellor. We are an Oracle. And today I'll be your moderator, but since everybody's very familiar with the space, and I think everybody has been in it for a while, now, we're getting bills passed and, actually moving forward with proper funding and seeing institutions come in. As you see the state of the full stack required to actually support what we need for global payments in terms of stablecoins and payments, where do you see the biggest bottleneck currently?
So there's no more exciting time to be working in regulated assets in the crypto space. It's clearly going to be kind of the wave for the next cycle. If you rewind about 2 years ago, stablecoins were used for two primary things: access to the US dollar globally in markets all around the world, and then also trading within DeFi. That's where they had kind of product market fit. Once Genius passed early last year, we now opened up being able to use them by institutions of all sizes in the payments use case. So whenever I first am introducing stablecoins to somebody, all I say is it's faster, cheaper, better money. It's faster because they settle atomically. It's cheaper because it's just a few cents, especially on some of these high-performance chains. And it's just overall better in terms of the yield you can earn along the way, and then also the transparency for a lot of these operations. So we're seeing banks around the world that do a lot of cross-border type payments get really into stablecoins super quickly. We're already seeing it for payouts and pay-ins for things like contractor flows or paying different vendors. If you look at the on-chain transaction volume of stablecoin, it's just up and to the right, just way up. So I would say the bottlenecks right now are on getting integrated. So financial institutions, which is who we work with, see this as a new, better payment rail. But financial institutions also tend to move a little bit slower. So they're implementing the APIs, they're investigating the SDKs. And so even the growth we've seen today, I think will be unlocked once it's even easier to get these folks on chain.
I think that's a really good point. From my perspective at Monad, we are an EVM compatible L1. And so I view what the bottleneck could be is really like settlement layer performance. I think on and off ramps, compliance, they will eventually be solvable, but if your chain can't handle the throughput without congestion, then the stack just falls apart, it breaks. And so Monad is really built for this. So at Monad, it's 10,000 transactions per second, sub-second block time, sub-second finality, near zero fees. So we're really kind of like built for this. So I think, just to get back to my point, I really think that the bottleneck will be settlement layer performance.
Can I say something?
Yes,
And
please.
can I get on the edge? It's hard for me to talk sunk down. Like, it is comfortable, but not really in my living room. I don't know if I won't say bottleneck. I will say hurdles. What are the hurdles on the horizon? Like you're going up a hill. You're jogging and you get up this hill. Then you see, oh, you're at the apex, but then you see there are other hills ahead. I'm going to bring up the issue of privacy. That's something Genius doesn't deal with privacy in a real way. And maybe we'll talk about it later. But I'll just point out, we all know in this room, transparency of blockchains is a feature, not a bug. But if we're talking about payments, right, because we know the usage of stablecoins has been different over the past few years, but if we're talking about institutional adoption of payments, when you have payments, you're talking about individuals and institutions making payments, making their financial behavior, economic behavior, which is now public, right? We have not had that. We've had, maybe individually, we have people doing trading. So the issue around, if I'm going to adopt this as a payment solution, what does it mean when my wallet is easily discoverable and other people can follow my transactions for the end of time for that wallet? That's a huge question that I don't think people have dealt with. We've just been so excited about, yes, stablecoins, payments, but privacy is going, I think, to be a developing issue. And I'll end with the thought, like, how does this relate to actual policy? I was talking to a financial regulator just a couple weeks ago, and this person said because they have the responsibility to make sure institutions are following something called the GLBA, which is about data privacy. And this person said, just very informally, they said, all that data, when does it become PII, private identifiable information? When you just figure out who belongs to that wallet, and now the institution is supporting those transactions, and your identity could be attributed to those wallets, there have to be solutions for privacy of payments.
To follow that, we are seeing governments increase their focus on financial surveillance and sanctions enforcement. So how do you see a balance? How are we going to reach this balance of compliance with privacy and open infra? The open infra that actually makes crypto or make crypto as valuable as it is right now.
So I actually love this privacy topic. This is on the bleeding edge of what's kind of being discussed by these people adopting stablecoins today. I was at the Western Union office a couple weeks ago, and we were talking about how they are basically rewriting their whole remittance business to run on top of the stablecoin they're issuing. Super exciting. But they also, when they have their quarterly filings as a public company, they are showing basically what their transaction volumes are within that time period. If they have fully on-chain but transparent transactions, you can basically front-run their entire earnings call by already knowing the payment volume, right? We also work with a lot of business institutions that don't want to tell every single one of their vendors exactly what their pricing policy is, right? These are usually bespoke agreements, and you can't just have, it's like you publishing your entire credit card, transaction history, and everybody kind of doing that and being kind of like completely open with it. And so businesses, this is a non-starter, and so they're all rapidly kind of evaluating these different privacy solutions. To go deep real quick, we're in the business of issuing Genius compliant stablecoins, and so compliance is just a must-have. It's not an optional feature. And so I think what you'll see is a lot of these privacy-focused solutions have viewer keys that the Chainalysis or TRM labs of the world have implemented. Probably federal agencies, enforcement organizations will have access to these viewer keys as well. But if you look on chain, a business doesn't have all its payment volume, all of its treasury volume, all of its vendor agreements there as information that all of its competitors could see and use against it. And so we're really excited about how this privacy space is evolving.
Yeah, I mean, maybe I'll just add to that because what you just outlined is probably the building block infrastructure for how to manage privacy and compliance. Building block in the sense of this might, it's not everything, but if you're going to have some sort of private solution, you do, especially Genius, complying with Genius, there do have to be ways to do sanction screening, to do blocking and freezing. That's in Genius. And issuers have been doing that, right? It's not like that's new. But to talk a little bit more about the view key, the question that's going to come up is, well, how do you manage it? What are the, we are at the bleeding edge of this because I won't say there's a gap, but the regulation hasn't really maybe caught up to what all of this is going to look like or what are the practices. So I will give a preview to it. At Alio, we actually have integrated with Circle's USDCX and also with Paxos to create stablecoins that are connected to their issued stablecoins but have privacy features because Alio itself is a private chain. And the way you do that is you issue a new token can be created or issued backed by the USDC or the USDG. The view key enables some party to do transaction monitoring, to do, to sort of connect with the freezing capability. That's part of the infrastructure because you have to have that in this environment. We can talk a little bit more maybe later about, well, how do you handle, who has custody of that view key? What are how do you deal with law enforcement requests? A lot of that is going to be, some of it case by case, some of it will be developed. But these are the building blocks. And actually I'm working on a white paper that's going to hopefully lay out this basic infrastructure, hopefully in the next couple of weeks.
Well, that's exciting to hear because my next question, it relates, so right now we talked about privacy and compliance, but what about privacy in terms of the infrastructure and speed? Because at least for a very long time in Ethereum or in the EVM space, actually doing proofs on chain, it's expensive and it took a long time. Where are we now and are we gonna get there in time to actually be able to support what we want to support?
Well, I want to put this on you guys. Well, it's like ZK proofs. I think it's really cool example of this, and with like the programmable compliance without like blanket surveillance. I'm interested in hearing how you guys are tackling this and like what your roadmap looks like.
So, and again, I should have said I've only been with Alio for about four-ish months now, but I'll try to give a sense of how I would answer these questions.
It's a brave space. You can just go for it.
Yeah, no. So we solved the problem. So I should have said that Alio is not EVM compatible because Alio was born out of, the Zcash white paper came out, however long ago, and then as you know, Zcash is like think Bitcoin for the normies, right? Think Bitcoin but private, right? Ethereum, everyone knows, programmable, not private. And then many of the folks that worked on the Zcash white paper later came out with another white paper called Zexi. And Zexi is programmable and private. So merging the privacy and programmability. And what that does for speed is now, because again, you're starting a new programming language. You're not, you're not starting with EVM. From the beginning, the computations are private, and then the proofs are created using zero-knowledge proofs. And those, might get a little bad with the technicals here, but right, because you're not doing the computations and redoing each computation for the new state of the chain, you're just it's computed off chain, and then so you simply have the proof, and the proof is what is recorded. So that allows you to do off chain all types of computations that might take a long time, but then it doesn't clog up the system. So I think that's where the speed comes in for at least for the Alio approach using zero-knowledge proof. It really helps to solve the problem because you're doing that from the beginning, not trying to build privacy after in a system where it's not private. That's I think, our approach.
All right, thank you. All right, so let's go back to competition. If stablecoins actually scale and start competing with Visa, with SWIFT, with bank deposits, do you see stablecoins as a complementary to this technology or as a competitive force to it?
Yeah, so I love this. So for all the payment nerds kind of in the house, Stablecoins are kind of a bit of a game changer here. I think when we go and talk with banks, we try to make them not scary, and we say, hey, this is just a new payment rail. It's going to be instant. It's going to be a couple cents. It's going to be fantastic. But underneath that is kind of a larger disruption. So when you're talking about any kind of traditional payment network, if you issue a payment, Friday evening, a lot of times it's not going to settle for 2 to 3 days later on Monday when basically the markets open back up, right? And so because of that, there is a world of pre-funded bank accounts that exist all around the world. And if you're moving money from Australia to Canada, that's going to hop through 3 different financial institutions during business hours, not during bank holidays. It's going to take a long time for it to hop through those different institutions, and they need to have a balance at their partner institutions for all of this to work. That entire infrastructure that we built up over the past 30 to 40 years goes away with stablecoins, because you can have one institution has a wallet over here for your Australia wallet, and this is your Canada wallet, and then you can operate instantly with stablecoins, and it's 24/7 by default. Whenever we talk about tokenization and bringing markets on chain, the #1 benefit is that these markets are 24/7 markets. For payments, that means you can settle on the weekends, during bank holidays, cross-jurisdictional around the world. For tokenized assets, that means the stock market doesn't open or close. You can trade oil futures on the weekend. You can trade gold futures on the weekend. You have no restrictions around 9 to 5 and kind of business hours. And so, in terms of payment-wise, this reorientation where banks don't have to have balances in every other jurisdiction through partner institutions and can have atomic settlement over stablecoins is going to be massively disruptive. But we don't want to scare them. We just say it's a new payment rail right now.
So complementary. We got one vote for that.
I think it's, another vote right here. I think it's complementary. I don't think folks, like from the payments lens, I don't think they're going to be necessarily fighting it. Like, they're integrating it right now. So, I'm speaking. And so, like, you see Visa, they're selling transactions on chain with USDC. You see MasterCard, they have a crypto partner program. And so the incumbents are like moving towards it. They're not like shying away from it. And so if there is like a competitive aspect to this, from my point of view, it's who's going to own the relationship with the users. It's going to be a distribution type of competition. But overall, I think it's really complementary.
Can I add one thing? I mean, I agree with both of these gentlemen. And I wonder if what we may see is, as new types of payments open up, you'll simply see naturally like stablecoins will dominate those payments. There's a lot of talk now, we're all hearing about agentic payments, right? That's the future. So it would just make sense that as agentic AI and agentic payments comes online, that, that's going to be where you're going to go use your stablecoin payments. You're not going to use your regular bank account for agentic AI. So I think we'll see that sort of naturally develop.
Okay, so being that everybody agrees that we're complementary to the traditional system, basically, and I don't disagree. Very policy focused now. Clarity Act, right? We're all waiting for this, and one of the main holdups is the yield. And we're saying we're complementary. You can use us this way. You can even probably earn it some through staking and things like that. Yet we're here in the middle of a battle, sort of like at a stalemate. And so how do we move forward, and what do you guys see? Like, what is actually the problem? Is it really yield, or is it who's going to be controlling, the CFTC, the SEC? Like, what is the actual fight here in your mind?
I'll say this with the caveat that I'm not a lawyer. I'm a product guy. This is all my personal opinion kind of thing. So all the disclaimers.
Sue him.
Yeah, that's right. So what I will say is Clarity is really interesting. We see it as another extension of Genius. So in the run-up to Genius, you had a ton of stablecoin momentum building, and so it was ready for day one after Genius passed. Now every financial institution is basically getting their ducks in a row for when Clarity passes, whether it's this year or next year, nobody knows. There's going to continue to be a political battle there. On the topic of yield, I think, frankly, banks see stablecoins, as payments as very interesting, as yield instruments as very competitive, right? So banks are in the business of taking customer deposits, doing lending activity, and keeping a high margin kind of in the middle, whether that goes to profits, whether that goes to spurring credit in the American financial institution. There's a lot of good reasons or not so good reasons that happens. But stablecoins are effectively tokenized treasury bills or money market funds. And so the things that you get on your high yield savings account, if you have one of those, you're going to keep a lot of your funds there so it earns a better yield than your savings or checking account. Stablecoins are a high yield savings account that's also a payment asset, right? And so we're trying to figure out what's competitive, what is complementary. And so I think that's the political battle that you're seeing right now. And I won't take sides of who wins. I have no idea.
Yeah, no, thank you. And the reason I asked it is because there's a lot of attorneys in DC that we can get their perspectives on this. But we're all building things, and for a lot of the builders, I think we see some of these battles a little bit different, and I think that's why it's so interesting to hear from you guys.
I think this too shall pass. I think that what you see the banks doing is sort of their immediate reaction to the seismic shift happening. And so if I talked to one guy a couple of months ago after Genius had passed, and he someone at one of the big investment banks. And this person said that, for the past couple of years, he's been saying like, digital assets are coming online, digital assets. And everyone was like in the bank, yeah, no, it's never gonna, we're never gonna see this stuff become institutionalized. And so that has been the thing. And so when things have switched, they've been like, okay, what do we do now? We're not ready for it, we gotta stop it. And so the impulse is kill it. But I think that's a temporary reaction. I think if I would recommend one thing that might be useful for the folks at the banks, it's actually something I think it's on Twitter that Austin Campbell put together. Austin Campbell just posted I guess it's an essay, a Twitter essay or X essay on your banking and policy people. This is how you need to understand stablecoins. And he sort of, there's a lot of it's very whimsical, but he basically says like, look, this is going to be good for you. And he really explains, like, if you understand how money works, this is not going to cut into you. It's not going to destroy deposits. So I think there needs to be just some factual, fact setting and level setting within the banking community. I think that's going to come. They're just reacting right now.
Yeah, I think bottom line, from a user's perspective, like, should they be able to earn yield? Yes. Otherwise, the T-bill returns will just transfer from the holders to the issuers. The status quo will remain. Banks will have a stranglehold on the interest. And I think also from an innovation perspective, yield-bearing stablecoins will move offshore and instead of at home. And so I think it's a win-win, not just for me personally, but from the conversations I've had with neobanks that are really want to be able to offer value to their end users. And so I think, yes, yield should be offered and enabled to users.
Thank you. With that, most stablecoins today are centralized, highly centralized, and censorable, yet they're running mostly on decentralized infrastructure. Do you think users understand that risk, and who ultimately bears the risk of failure?
Do I think users understand that risk? Absolutely not. I think only crypto and blockchain nerds really get this stuff. Also, the term stablecoin is a little bit loaded at this point. From the past year, anything that was just pegged to $1 has been called a stablecoin, when the underlying yield and how the deposited capital is used could be anything from very safe, Genius compliant, short-term duration, U.S. debt, to running a hedge fund, right? And everybody was just calling all these things the same thing as a stablecoin. The risks from an infrastructure standpoint for seizure, for having network attacks where you have an infinite mint and all of a sudden your stablecoin has a $3 trillion value. Users do not get these things. So I think it's on the distribution points, the wallets, the fintechs, the banks that are adopting these solutions to make the right risk trade-off for their users to make sure that they're protected. Again, I'm in the business of issuing Genius compliant stablecoins, so that's about as safe as you can get, and the assets backing them are as safe as you can get. If you don't have an opinion on going higher up the risk curve, just use a Genius compliant stablecoin, number one. If you do want to try to get higher yields or kind of play around with DeFi looping or farming type of activities, you can certainly do that, but just make sure you're building for a user base that can tolerate if something bad were to happen.
On the point of decentralization, if we're talking about like open infrastructure and efficient TradFi, from my standpoint and from where I work at Monad, and really it's like Monad proves you could have both. So like we have a decentralized network of 200 plus validators that were backed by no single point of failure, censorship resistance, baked into consensus. And we can also provide, financial products have the ability to compose on-chain transactions at the speed of a card tap. So we're really built for payments, and this is like our lane in which we're really trying to carve out. And so a lot of the folks we're working with right now, a lot that we'll be announcing very soon, they are very, very leaning into decentralization. So I'll just say that.
Great. Well, with stablecoins, I think I agree with you guys that they do have a good path at really being able to succeed. But if they do scale really quickly, which part of the financial system breaks, if any?
Sorry, what was the question?
If stablecoins were to scale, like we foresee them, with or without the Clarity Act, are there any parts of the current financial system that break with it? Aside from compliance, that's very hard, or maybe that is it. I don't know.
I don't think anything necessarily has to break. I think the interesting framing would be like, what does this unlock? So like programmable money, cross-border payments, and so forth. I don't think stablecoin specifically has to destroy the like traditional like finance industry. It more so like in order to be transformative, I think it really, they just have to be better. And so I think everything could be complementary, it could be additive to scope. So I don't think anything actually has to break. I'm also a Pisces, and so I view this, I'm very optimistic about this. And so I think we could all find a way to work together and, all come out on the other side like as winners. It could be win-win-win. Us, TradFi users, I think, especially just from like where I'm sitting, I see that's how it's going to play out.
I'll take a spicier take just for fun. So, some of the estimates have been that stablecoins might reach 4 trillion, I think, in market cap in the next like 3 to 5 years, which if that were to happen, you're talking about US debt being like one of the dominant financial instruments all around the world. And so what's one thing that would break would be other fiat currencies, because they would want to push back against this massive influence of the US dollar all around the world. So, play out your geopolitical scenarios there, but like as the world moves towards a duopoly, there might be pushback against that type of massive US debt proliferating all around the world. So that's number one. Number two, this one's a little bit more upbeat. I think consumers win, and if you're charging fees on payment volumes, $30 wire fees to move your money same day from your bank account to your brokerage, especially folks that are doing cross-jurisdictional, cross-country payments. If your business model depends on those fees, you're going to lose out, because now there's going to be this new payment rail where you don't have that kind of impedance and can send things for free.
And you say you were working with a money transmitter, or like to help them issue a Genius Act compliance stablecoin. How do you see it, and completely weird, but how do you see their business model changing? I mean, they are right there. This is what you just discussed, but you have a person that you're talking to. Do they actually see their business model changing?
Yeah, so this is classic innovator's dilemma that not only folks in the crypto space have been grappling with the past few years, now AI is kind of pushing everybody to this innovator's dilemma as well, right? So Western Union is one of the oldest U.S. companies, I believe. They were one of the big people that got lines running across the U.S. so that they could basically provide credit as the railroad was being built out. So this is an old school business that has had to reinvent itself multiple times over the past couple centuries. They basically see stablecoins as the next evolution. And if they don't do it, then innovator's dilemma that people are going to go to some of their competitors. And so I think that's why they're adopting this technology so early. That's why they're issuing their own stablecoin, is so that they can kind of be the leader in this next wave and not have a competitor gain market share. So they kind of have to play if they want to continue to be relevant in the next 100 years.
That's my take for banks too. But on that, what is the most exciting thing that you guys see in crypto right now, just so that we can wrap up?
I mean, for me, it's because I'm a little, obviously because of where I am, it is the privacy space and managing or balancing the tension between privacy and compliance and seeing, actually what's being built. That's why me talking on the stage, I've shared more about how the view key works and how, how to manage risk with privacy stablecoins than is written. Like I'm working on a paper now. So to me, it's just really exciting to be at the cutting edge of this.
Quick follow-up. After clarity happens, because you're talking about the privacy fight, why do you think it's the biggest privacy? Is there going to be a privacy fight?
A privacy fight? Yeah. I think the privacy fight is coming even before clarity. So, for example, I alluded to it, but let me break it down a little bit more closely, right? The data, the consumer privacy, GLBA, right? The privacy law that financial institutions have to comply with means that you have to give consumers the ability to opt out, and you have to also understand, is this public information or non-public information? If it's public information, you don't have to protect it in the same way. That's how regulation works now around data privacy. So if we're in a situation where we're blurring the line between public and private information, that really upends, I think, the whole sort of data privacy compliance. I think this is sort of the next thing. And I'll give you a perfect example. I remember I was on a panel once and I was talking to a guy who was doing tokenization. We haven't talked about RWA tokenization. And a small bank, and they're doing something real experimental. And he's talking about how they're going to tokenize their deposits. And just afterwards in the green room, I'm like, hey man, so what do you guys think about, like, if you're going to tokenize all those deposits, like, anyone can take a blockchain browser and like people could look at your customers' deposits, you could look at this and that. And he said, oh yeah, I think we're going to have to think about that. They already have a pilot program, or they're going to, so I think with Genius, and with tokenization, we're going to be talking about that even before clarity.
What are you most excited about?
I think stablecoin linked cards. That's something that's been very top of mind for me, and what my BD team is focused on right now at Monad. And I think these cards are really looking for a chain that can match their card networking like timing to really be able to have high throughput, the finality, and to really be able to deliver at the speed of a card tap. And that's something that I'm inundated with. Like, my inbox is crazy, my Telegram messages are crazy. Talking to a ton of neobanks about this, and they're starting to realize that like settlement is like a really big deal for them. And also, just from my own personal perspective, I'm interested in it too. Like, I'm dabbling in all these different cards, and I want to be able to like earn yield on stuff I'm holding as well. So I think the stablecoin linked cards is a very interesting segment that I think we all should be paying attention to. And I also think it could be a potential threat, at least from like a policymaker standpoint, on top of stablecoins. They should really be like embracing and running towards it instead of like shying away from it. So that's something I'm really excited about personally.
Would that be like a direct competitor to like Visa?
It could be, but also a lot of these cards, like so for instance, like Rain, and Rain has like Rain, Cast, a few of these others. They're all like Visa issued, and so either Visa majority or then Mastercard, and so I think they're all collaborative and working together, and so I don't think it's like an issue for Visa per se, but I think it's something that they're trying to figure out.
Well, it'd be interesting to see it more as a competitor, just because Visa takes so much, like what, 3% of every transaction or something like that?
Well, and I'm not oversharing, but a lot of these cards are going to be providing like ways to earn. They have their own like earn programs, and this is to be able to like do like a one-click into like a DeFi vault via like Morpho, Aave, or something like that, and to be able to earn like 6% APY up to 10% APY. And so I think the incentives are there. And so these cards are going to be able to have way more retention, and without having to overdo or overcalculate on like the DeFi education. Like these users don't have to figure out how to use MetaMask or how to bridge and all that type of stuff. It's just one click and it's there. I think that the incentives are there, and I think users just have to become aware of it. So I think there's going to be a lot more campaigns coming out around that. But I think, and going back to our previous question about like complementary or competitive, I think that will also be competitive, and that comes back to what we're seeing with the banks as who they perceive as threats. And so I think that the friction that we currently have right now with crypto and DeFi, I think that will eventually get removed by probably by the end of the year. I feel like the UI UX will be improved greatly, and me and my team and Monad are trying to help be behind that too.
You heard it here, end of the year. Okay. All right, I think with that, that's the end of our panel. Thank you. Thank you so much for coming. Thank you for sharing
Thanks for
with
having us.
everybody.
Thank you guys.